If you're self-employed in Alberta, there's one issue that causes more mortgage declines than most people realize. And the worst part is a lot of self-employed people don't even know it's a problem until they've already started applying. Most of you think you'll get declined because of bad credit or because you don't have a big enough down payment, but in most cases, it's actually neither of those. So in this video, I'm going to show you what the real reason is, explain why it catches so many self-employed Albertans off guard, and most importantly, teach you how to fix it before it ruins your approval. By the way, my name is Ushindi Mutabazi. I'm a mortgage associate here in Alberta, and I specialize in helping self-employed Albertans like yourself qualify for a mortgage without waiting 2 years for income averages, paying more in taxes, or changing the way that you run your business. Before I give you the number one reason, you need to understand why so many of you misdiagnose the problem in the first place. It's because you're thinking like a business owner, which makes sense. It's the reason you're successful and are in the position to be buying a home. You look at your revenue, you look at your cash flow, you look at the money coming into your business, and from your perspective, you're saying, my business is good, my income is good, I should 100% qualify. I agree with you. That feels pretty logical, but sadly, lenders do not approve based on how you, the business, or even I feel. Lenders are not sitting there and asking themselves, does this person work hard? Does this person's business seem busy enough? They're asking themselves, what income can we actually use? What income can we document? And the most important question, how much risk are we taking on if we lend this person money? This is exactly where most self-employed people get blindsided, because your income in real life and your usable income on a mortgage file are not always the same thing. It might seem like a small detail, but it honestly changes everything. The number one reason that self-employed Albertans get declined for a mortgage is due to the fact that the income that they believe should qualify them cannot be used properly, cannot be verified, or just simply does not fit the lender's guidelines. You can have real money coming in, you can have a real business, you can even be paying your bills and still get declined. But here's the thing, just knowing that unusable income is the problem does not automatically get you approved. The next step is knowing how to assess your file the same way a lender would. That way you can avoid getting declined. You have to know where it shows up, how it's getting interpreted, and what it's doing to your approval chances. The first way unusable income shows up is too many write-offs. And this is probably the most common one. You can have great revenue, but after expenses, deductions, and write-offs, the income that shows up on paper looks dramatically lower. From a tax perspective, that means your accountant is doing a great job and helping you legally reduce your taxable income. But the lender is not qualifying you on your gross revenue. Most lenders are qualifying you based on what's left after the deductions, because in their head, that's the money that would be used to pay off the mortgage. This is why two people in the same industry making similar top-line revenue can get two different approvals. The second way unusable income shows up is poor documentation or a messy income story. In this case, the income might actually be there, but the file raises more questions than answers. For example, you might be incorporated, but do you understand the difference between what the business earns and what you personally pay yourself? Maybe you pay yourself a mix of salary and dividends, but has anybody actually sat you down and properly explained how these get reviewed? Or it could even be your tax return, notice of assessment, and bank statements are each telling a completely different story instead of clearly lining up. If your file raises questions faster than it gives answers, the lender starts pulling back. Their job is not to guess, their job is to verify. So when the income story is unclear, complicated, or incomplete, your chances of getting that approval you're looking for get lower and lower. This video is sponsored by myself. If you're looking to buy a home in the next 6 months or just want some clarity on your current position and where you stand, click the first link in the description and complete my 3-minute mortgage readiness quiz. It's completely customized, and once you complete that quiz, I will personally record you a custom video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. This is not automated, it's me doing the work. Also, make sure to follow me on Instagram at It's Ushindi for more self-employed mortgage advice. Or if you have any questions and just want to chat, a link for that will be in the description as well. Let's get back to the video. Now, here's where it gets even more frustrating. Sometimes the income could work, your documentation could work, but you still get declined because you chose the wrong lender. Not all lenders view self-employed income the same way. Some lenders are more traditional, some want cleaner, more simple paper trails, some are better with certain self-employed situations, and others can work with a file another lender will not touch. So being declined does not always necessarily mean you're screwed. Sometimes it just means your file was matched to the wrong underwriting model, which makes a huge difference. And I get it. I am with you. It is very annoying. One person says yes, the other says maybe, another says no, another says come back in 1 year, another says reduce your write-offs, another says come back in 2 years. It is a lot. Not to mention, you still have a business to run, you still have clients, staff, bills, and a life to live. It should not be your job to spend hours doing all this research, trying to decode lender guidelines, and spending a couple more hours on the phone hoping you're talking to the right person just to figure out if you can get approved. But that's exactly why working with someone who actually understands self-employed mortgage files matters so much. My job is literally to take the stress off your plate and look at your file properly, figure out what the real issue is, match you with the right strategy, and help you avoid making these mistakes that could cost you time, money, or an approval. If you would like me to take the stress off your shoulders so you can continue doing the things that actually matter in your life, send me a message on Instagram. The link will be in the description. The fourth way your unusable income can become a decline is when the rest of the file adds extra risk. This is where your credit, your debts, your down payment sourcing start to matter even more. To be 100% clear, your write-offs, the lender, the debts, your down payment are not always the root problem, but they become much more dangerous when the income is already under a microscope. If the lender is already asking questions and then they find out the down payment has messy transfers, random deposits, or a poor paper trail, these things start to add up. For self-employed borrowers, your mortgage is never about one number. It's about how the whole story fits together and how your financial story actually gets translated. So how do you fix it? How do you avoid getting blindsided? The first thing you need to do is follow me on Instagram. I specialize in helping self-employed borrowers like yourself qualify for a mortgage without waiting for the 2-year income averages, without paying more in taxes, or changing the way that you run your business. And on Instagram, I post daily videos giving tips and advice on how to properly structure your file and qualify for the mortgage that you're looking for. After you follow me on Instagram, the second thing you need to do is figure out what your real qualifying income is. Not your revenue, not what you feel like you make, not what you could be making next year, your real usable mortgage income. If you skip this step, you are literally shopping blind. And when self-employed people shop blind, they usually aim way too high and get disappointed, or aim way too low and box themselves into a worse outcome than what they could have originally had. The third thing you must do is clean up your income story. This means getting your documents organized properly, understanding what your taxes are showing, knowing what documents will be used, and not just finding your documents, but analyzing what the documents are communicating. The fourth thing, and this one is very important, choose the right lender. Do not apply blindly because the bank has a nice rate. Do not assume every lender will treat your file the same, because they won't. And definitely do not assume because one lender said no, that means your situation and your dreams of getting a home are dead. The right lender matters, the right lane matters, and the right strategy matters. The next thing you have to do is reduce all the other risk before you apply. That means cleaning up your credit balances, avoid taking new debts right before you buy, and make sure your down payment is properly documented. Typically having it in one account for at least 90 days is more than enough. Your goal should be to make your file easier to say yes to. Since you're self-employed, your income is already getting a lot of scrutiny. You do not want to give the lender any extra reasons to say no. And here's the last part, but it might be the most important part of this whole video. Do not confuse a casual pre-approval with the real strategy. A lot of self-employed buyers think they're good because someone at Costco gave them a number. But if nobody actually sat you down and reviewed how your income would be used, if nobody looked at your documents, if nobody assessed what the perfect lender is for you, if nobody tested the file the way underwriters would, then you do not know where you currently stand. You need to stop guessing. You need to stop applying blind. You need to stop taking random advice from people who do not specialize and understand self-employed files and how they're actually viewed. If you're looking to buy in the next 6 months, click the first link in the description and complete my 3-minute mortgage readiness quiz. Once you complete that quiz, I will personally record you a custom video within 24 hours breaking down your real numbers explaining exactly how a lender would view your specific file, and laying out a clear approval strategy based on your timeline, your documents, and your goals. Also, make sure to follow me on Instagram at It's Ushindi for more self-employed mortgage advice. Or if you have any questions, a link for that will be in the description as well.